Today, we're going to be looking at 3 dividend stocks that I think you could hold in your portfolio forever. So without further ado, let's go and get started. Number 1, TD Bank Group. So TD Bank Group operates primarily in the Canadian personal and banking sector, but it also has operations in the United States. Now let's go and look at their most recent reported earnings mix to see the detail. So 44% of their earnings come from the Canadian personal and commercial banking sector. 30% of those earnings come from the US retail banking sector. 14% of those earnings come from the wealth management and insurance solutions. 7% come from wholesale banking, and 5% coming in from their investment in US based Charles Schwab's brokerage. Let's go and look at some of their dividend metrics. So we can see here, Seeking Alpha gives TD a dividend safety rating of B, dividend growth rating of C, dividend yield of B, and dividend consistency of A. So we're going to dive right into each of these in greater detail now. Now the dividend summary here, 5.09% dividend yield, so a nice strong dividend yield here. That is $2.84. A nice low payout ratio here of 46.48%. 5-year dividend growth rate of 6.88%, and dividend growth of 9 years. Let's go and look at that dividend growth rate in detail. So as we can see here, the 3-year compound annual growth rate of the dividend is 7.18%. The 5-year compound annual growth rate of that dividend is 6.88%. And the 10-year compound annual growth rate of that dividend is 6%. So nice, strong dividend growth here, in my opinion. It's not in the 15% plus range, but still very, very respectable, coming in at that 6 to 7% range. Now, us as dividend growth investors, we like getting dividends, but we want to make sure that they're safe and reliable. We don't want the dividend to put financial stress on the operations of the company or on the company's future growth. So that's why we need to look at the dividend payout ratio. And as we can see, it's a nice 46.19%. And if you're using GAAP here, it's 49%. So again, a lot of room to still grow that dividend over time. All right, let's look at the dividend history here. So consecutive years of dividend growth, 9 years. Consecutive years of dividend payments, 34 years. I'm going to show you why their payment streak of dividends is a lot longer than that in a minute. But let's go and look at this chart. So again, it's just like a step ladder up and to the right. TD has been increasing this dividend for a long time, and it's super, super reliable here, in my opinion. Just a consistent dividend grower and consistent dividend payer. How consistent, you may ask? Well, let's go and look at TD's investor presentation just to be sure. 166 years of continuous dividend history. They've been paying out these dividends for such a long time, 166 years. Now again, at the time of this publication, it was a dividend yield of 4.7%. Now it's at 5.09%. So again, an even stronger starting dividend yield. And as we can see, their dividend growth rate from 1995 up until 2023 was roughly 11% compound annual growth rate per year during that time. So a great, great dividend grower here. What about total return? So when you look at these total returns for the Canadian banks, again, people ask me all the time, why do you invest in Canadian banks? This is why. Look at the 1-year return, 9.4%, 3-year return, 18.5%, 5-year return, 6.8%, and the 10-year longer timeline here, the 10-year return at a nice 11.5%, that being total shareholder returns. So again, great, great shareholder returns here from my first dividend stock recommendation. Now let's look at number 2. We have no other than Costco Wholesale. So if you're not familiar with Costco, I don't know where you've been, but Costco Wholesale has a huge grip on the consumer in both America, Canada, and actually over the world as they're expanding internationally. So let's go look at some facts about Costco. So Costco today, they're the 3rd largest global retailer, the 11th largest in the Fortune 500, and they have a $242 billion market cap. So their sales are $238 billion over the last 12 months. Their warehouses make up a combined 126 million square feet, or 147,000 per warehouse, and they employ about 310,000 employees. So Costco today, They're made up of 861 warehouses worldwide. Again, like I said, they're mostly concentrated in the US and Canada, but as you can see, they've been expanding into Mexico, Japan, UK, Korea, Taiwan, Spain. They've just opened a bunch of warehouses in China, France, Iceland, New Zealand, and Sweden. So again, we can look at their members. So again, Costco's members are key. Their member satisfaction is key to their success. They make their business all about their members. And I know because I am a Costco member, they do a great job. So they have 71 million households as members. This represents about 128 million total cardholders. And look at that renewal rate. This is how you know their members are happy with both their service and the value proposition of Costco. They have an almost 93% renewal rate of their membership. And through this membership, they generate $4.6 billion in membership fees over the last 12 months. So this is what a Costco looks like here. And again, I'm not going to try to pronounce this province here or this city in China, but look at that. That is a behemoth of a Costco. And as you can see, people are lined up out the door and parked all over. Again, this is nothing new to you. If you're even going to a Costco in Canada or the States, it is usually very, very busy. Let's go and look at some of their dividend metrics. So Costco, their dividend yield is very, very small, is 0.74%. So you're not going to retire off this dividend anytime soon. But let's go and look at some other dividend metrics. So their dividend safety score is given an A plus here, dividend growth an A, dividend yield like we saw is very low, is given an F, and a dividend consistency is given an A minus. So the dividend summary, very low yield like we saw, annual payout of $4.08, a nice low payout ratio here of 27.06%, so super low payout ratio, and a 5-year dividend growth rate of 13.15%. Let's go and look at that dividend growth. All right, so Costco, over the past 3 years has grown their dividend at 4.66%, over the past 5 years at a higher 13.15%, and over the past 10 years at a 13.32%. So again, nice dividend growth rates here. Again, over the past 3 years being at 4.66%. It is a lower amount here in my opinion, but what we're going to look at shortly is their dividend history and you'll see why. So their dividend safety, like we saw, the payout ratio is at 27 to 26%, so a lot of room to grow that dividend without putting any stress or financial stress on their operations. Let's go and look at that dividend history. See, now you can see these larger black bars compared to the other smaller black bars, which is the regular dividends. As you can see, those are growing over time, but these right here represent special dividends. So what Costco does is they accumulate cash. Their capital management strategy is great. They accumulate cash, and then when they have nothing else to do with that cash, they give a special dividend to shareholders, and these special dividends are huge. When you look at the last 4 special dividends, in 2012 it was $7, in 2015 it was $5, in 2017 it was $7, and the most recent one in 2020 was $10 per share. So these dividends are huge, and again, great dividend growth on top of those special dividend payments. All right, so number 3, we're going to be looking at none other than Microsoft. So this is the largest holding in my dividend growth portfolio, and there's a couple great reasons why. So Microsoft, and again, if you've been living under a rock and you don't know what Microsoft is, I encourage you to go and search their business, and you'll be using Microsoft's products as you do that as well. So Microsoft focuses on commercial office products such as their suite, their Microsoft 365, you've got Word, you've got PowerPoint, you've got Outlook, you've got Excel. Again, that focusing on this core business of Microsoft and their software. They also have the cloud business, which is Azure, and then they have personal gaming and computings, and they're just closing in on the Activision Blizzard deal, which I think, in my opinion, will propel them to a greater height in gaming. So we should all be familiar with Microsoft, and they are a growth machine. So let's go and look at some of Microsoft's dividend metrics. Microsoft, again, paying a very low yield of 0.89%, and we can see why. It is more focused on growth here, but we'll look at their dividend metrics nevertheless. So dividend safety, A plus, dividend growth, A plus, dividend yield, as we saw, is very low, so it's given a D. Dividend consistency, A minus. So again, very low yield here, pays about $3. Payout ratio of 26.70%, so super low payout ratio, a lot of room to grow that dividend, and a nice high dividend growth rate over the past 5 years of 10.12%. Let's look at that dividend growth rate in greater detail. So 10.06% here over the past 3 years, 10.12% over the past 5 years, and 11.45% over the past 10 years. So this is some of the most consistent dividend growth I have ever seen, hovering between that 10 to 11% per year dividend growth over the past 10 years. Let's go and look at that dividend safety. And again, like we saw, the payout ratio here is a nice low 26%, so ample room to grow that dividend over time without putting any financial strain on the company's future prospects or current operations. All right, so the dividend history. Microsoft has been paying out this dividend for a long time, and again, just beautiful. Beautiful here, in my opinion. Just nice, consistent dividend growth over the years, just like a stair step all the way up and to the right. And again, I expect this to continue for the foreseeable future. So those were my top 3 dividend growth stock picks that I think you could have and hold forever. Now, let me know if you had any comments or questions, or if you thought you had any other picks in mind in the comment section below. And with that, I will see you in the next video. Take care. Have a great day. Bye. Please note, I am not a financial advisor by any means. The content I make is merely for your entertainment purposes only. Investing is risky, so please always do your due diligence when investing, as you can lose money, and I am not responsible for any investing losses or decisions you make or incur. Thank you. Have a great day. Bye.